Okay, sorry about last time. I'm never good with anything technical. Um, I think we're allowed to just start, are we? I'll kick on. Obviously, if you've got any markets you'd like me to look at, please do let me know, as I always say. But I'll show you some of the things that I'm looking at the moment. Stock markets I'm in. Forex has been relatively quiet, so probably worth looking at some stock markets if anyone follows them. S&P is the... Well, actually, I'll tell you what, I'm going to start with the Nasdaq. I don't normally look at the Nasdaq or the Russell, but there's good reason to look at them. If you follow me on Twitter, you'll know I've been banging on about some pretty negative looking patterns. You can most clearly see these on the daily chart, which, if you give me a sec, should appear in a second. Okay, there's the Nasdaq. Now, today's completely caught me out, I have to be honest. I thought this head and shoulders was going to lead to a breakdown almost as soon as last Friday. I thought it just looked so negative that we could break lower. However, that hasn't been the case. Today's move has completely surprised me, completely caught me out. The Nasdaq has got a 100-day moving average at 35.85. We're now above that. We're through this fib resistance area at 35.91. We're testing the 15-day move. The 55-day moving average at 36.05 almost. Certainly got close to it. So yeah, I'm puzzled. The head and shoulders is still relevant. I mean, until we at least break above. Let me see now. This is a bit slow, this computer. Until we at least break above 13,620. That's the only time I'd start to think, am I wrong? But just be aware, today is only a positive day in a pattern that's been building since the end of December. So really, one day doesn't make a huge amount of difference on something that's been building for almost 5 months. But be aware, this is a very negative pattern. Of course, with the head and shoulders, the confirmation doesn't come until you break below the neckline. So I'm jumping the gun a little bit in anticipating a fall in the last day or two. It's not until we break below 3,400 that you can say that this pattern has been completed, and it's only then that you'd say that we'd fall. Let me see now. That's 3740, 3404. So it's 370 points or so, 350 points at least from 3,400. That would be the downside target. So we're looking. Well, I'll show you some fib support, which would be the obvious target. Anyway, you get the picture. Big head and shoulders pattern. Unless we break above what is at the moment the right shoulder, which is at 36.20, then I'd have to reconsider this pattern, but just be aware of it. On the longer term charts, if we break lower, then we're looking at sort of a lot of fib support around 3110, 3100 area, which ties in quite nicely with the measured target. So I think that's probably where we would go. This is obviously a much longer term picture, and this week could be quite crucial for it. On the weekly pattern, on the weekly chart rather, you can see it not quite so clearly perhaps, but you can see this head and shoulders, and we're just coming up quite close to the peak of the right shoulder. So we'll have to see if we fail there. Similar picture for the Russell, which I didn't spot until someone pointed it out to me on Twitter. That's the value of Twitter. Again, big head and shoulders pattern. I got quite excited on Friday because we were retesting the neckline for the third day. And I thought, third time of a test, we're going to break lower. Well, in the end, we didn't. And I was surprised. We've had a hell of a reaction. We're back up through the 200-day moving average. And I mean, short term, this actually looks quite positive. Will we get as far as the 100-day moving average at 1150? Yeah, we certainly could do. We've got May highs of 1136. So let's see what happens there. If we fail and turn around, then this pattern is still relevant. We start getting through the 100-day moving average, it won't be. We did get a little bit oversold in the daily chart, but not enough for me to think that we were really going to see a decent bounce. Anyway, we did. So I got that wrong, in effect. You can see the shorter term chart here. I'm just moving this up a bit. The shorter term 4-hour chart, we did get a little bit oversold. I didn't think that was enough to trigger a huge bounce. But anyway, we've managed to get through some short-term moving averages. We've certainly managed to get through in the last 4 hours a short-term trend line going back to the beginning of April. So that's approximately 5-6 weeks old. So actually looking quite positive, and I certainly wouldn't be surprised to see the Russell get up into sort of 1125, 1127 area, and we'll have to see what happens there. If there's failure, and we can, then we can start looking at this head and shoulders pattern and potential break below last week's low, which would confirm the formation of that pattern and would be quite significant for a move to the downside. My take on oil, yeah, let's have a look at oil. Well, actually, let me just do the S&P, which isn't quite so clear as the Nasdaq and the Russell, but then it also probably didn't go up 40% last year, like those two. Let's just have a quick look. Okay, so the S&P, we're just about to retest. It looks, we're certainly very close to retesting all-time highs. I mean, the high in March was 1887.5. The high in April was 1892.5. We're now making new highs in May, and we're testing that March, April high, all-time highs of 1892.5. Obviously, a close above 1892.5 would be very positive and might be signaling the next leg higher. Failure, however, at all-time highs could trigger profit taking. I mean, there's not much more you can say when you get to all-time highs. It's a question of whether we manage to push through it or whether we fail and head lower. You can see that we've had some decent support around the 1865-60 area, which I had been noting on my reports, and that support's held quite well. We're going to need to see a close below 1860 to confirm any sort of negative outlook, and then we've got probably another 30 points, 25, 30 point drop on the downside before we test some decent support. So those are the bigger levels to watch on the downside for the E-mini S&P. It's just a question of whether we can close above or below the all-time highs. I mean, I thought that candle on Friday wasn't positive enough to trigger this move today. That's just completely caught me out. I have to hold my hands up and say that I didn't expect that. I've certainly lost money on those short positions I had today. Oil, yeah, let's look at oil. Interesting oil. It's been quite good fun lately. Start with the weekly chart, seeing as it is a Monday. So the last 2 weeks have pretty much held the same level. I'll show you why in a minute. There we go. Daily chart is quite clear why. Just using fibs, trend lines, moving averages, we have held the 100-day moving average. Very nice. We've held this short-term trend line going back to the end of January, also quite nicely. We didn't actually manage to close below either the trend line or the 100-day moving average, as we became very oversold on the daily chart. And if you will follow me on Twitter or my daily reports, you'll know that on the day that we bottomed, which I think was a Thursday, I was calling a low. I was actually calling a low at 99, sort of 25 area, and we spiked down another 50 pips below. Didn't quite trigger the stop loss. We just managed to get away with it, literally by a couple of pips, to be fair. But we did manage a recovery. We did manage to put in a low for the correction on that day. I had expected a slightly better recovery, to be fair, but the fact that is we are holding above trendline support, 100-day moving average support. We're starting to make some ground. My first main target for the move was 101, 10.15. We managed to hit that on Friday. Today we're looking positive again. We've got a sharp sell-off. I mean, you can see 1, 2, 3, 4. Really 5, 6 days, we've really gone nowhere. Certainly in the last 4 days, we've been stuck in a range. So until we move out of that 4-day range, we won't really know where we're going next. But I fancy it to the upside still. But today we're managing to get above the 200-day moving average, which is at 146, which is a little bit more positive. But we're going to have to get through 101, 10.20 before we can start looking for the next leg higher. You can see it's obvious short-term fib resistance, and it worked perfectly on Friday, finally getting to our target after quite a steady crawl higher. So let's see if we can get through there. Strong resistance at 101, 10.20. If we get through there, we're looking at 101, 85.90 is the next target. We could get there quite quickly. We could see some sort of acceleration on a move to the top side. What changes this? Well, obviously we've got this short-term trend line and longer-term fib support around the 99, 85, 80 area. We've then got the 100-day moving average. Keep an eye on that around the 99, 50, 45 area. We close below there. That is going to be negative. We haven't managed to close below the 100-day moving average since the beginning of February. So that would be a bit of a sell signal, in my opinion, and I think it would add pressure. And you've got to be aware that this really could just be, actually, let me put it on the 4-hour. This could be a flag in a bear trend. You can see that quite clearly. There you go. Yeah, because this is the bear trend that's been dominant, the short-term bear trend. It's only been going since the middle of April. So it's only been going sort of 4 weeks in total. But this could just be a flag in bear trend. And if we fail again at 101.1020, then the next leg lower could be ready. Where could we go? Certainly 98.20 is an obvious one. Ties in with some price action here, and then a break lower. We've got March lows at 97.37, well, 97.55, 97.35 should we call it, and then below that we've got some fib support 96.53. So wouldn't imagine we'd have a whole lot of trouble getting to 96.53 through May if we were to fail around that 101.1020 area again, and then break below this support in the sort of 99.85-45 area. Do you recognise Sunday candle? I know what you mean. Markets open midnight, don't they, sort of on a Sunday? On my charts, they kind of roll into the Monday price action, so I pretty much take that as Monday price action, and I don't really see, I don't really take that as any separate price information on the Sunday opening. Oil, yeah, that is my take on WTI crude oil, indeed. If you've got any more questions on that, if I haven't covered that in enough detail, please do let me know. If you want Brent, I can have a look at Brent. It's quite interesting, actually. There is some stuff going on, but I won't do it unless you ask me. There's not that many people think, not that many people seem to trade Brent. I certainly don't get many subscriptions for it. I think oil down to 96. No, I don't. I think oil looks quite positive in the short term. What I'm saying is I favour a move higher. I favour a retest of 101.1020, which we may have even seen already. If we get through 101.1020, then I'm continue to remain positive on oil, and I think it'll go to the next target of 101.80, 101.90 at least. Could even go higher. It could even get into the 102.50-60 area. There, I think we're going to struggle. What will change my mind and make me think that this is just a flag in a short-term bull trend, a bear trend rather, is if we start breaking below 99.80 initially. That would certainly alert me to something more negative. And then a break below, and in particular a close below 99.50-40 support around that 100-day moving average. That would certainly add pressure, and I would think that would see oil resume a bear trend. So I hope that's clear. Unless we start moving below the 99.85-45 area, I remain quite positive on oil. But a break of that support would be negative. And yeah, I do see it probably as far as 96.5, 96.50 area. Any lower than that, I wouldn't know. I'd have to see nearer the time how things are developing and what kind of patterns or clues that the market was showing us. I do tend to look quite short term. Anything beyond a sort of 4-point move would be beyond my scope at the moment, really. We're not getting enough clues from the weekly chart. You can see from the weekly chart, since February, we've basically gone nowhere. We've moved within a, what would you call that, 5-point range, 6-point range, up and down, you know. What can you do with that? It's directionless, so trade the range until it breaks. That's pretty much the rule. If you can trade that 5-point range with the midpoint somewhere around, let me see, this 102, 102.25 area, well, you're doing well. July, I think 113, fib 161. Sorry, I don't understand that question. Let me know what that means, Chris, and I'll try and answer that for you. In the meantime, DAX and IBEX, yeah, let's go back to the stock markets. IBEX is a good one. I never look at that. I'll have to try and find the code for it. $113. I'm not saying that it's going to go to $113. If you want a really longer term outlook, I'll try and give it to you. Hold on. The only way we're going to get to 113 is if we get through 102.20, 102.20, hang on. 102.20, 102.60 is quite strong resistance on a day-to-day basis or week-to-week basis. If we get through there, we're going to test, I would imagine, the upper end of the recent 2-month range, which we're looking at 104.75, 105.22. There's that sort of 50 pip range that we're going to have to break through. That's obvious. I mean, that's just this year's high. So if we get through there, then we do stand a chance of getting up to 113. But we've got quite a bit of resistance along the way. I mean, it's an obvious, we've got 109.00 up to 109.30. We'd have to get through there as well. So I'm not saying we won't get through to 113. I don't really see it, to be quite honest with you. I don't think oil looks that positive at the moment. And there's quite a few barriers before we get there. And look at this trend line as well. We've got a trend line going back to the beginning of the year. That's at 103.00. So that kind of ties in with that 103. Hang on, what did I say there? Yeah. 103.00. Yeah, we'd have to get through that as well in order to be testing the upper end of the recent range. Sorry, I can't give much more of a longer term projection when we've got this sort of thing just going sideways. And even before that, if I scrunch the chart right up, there isn't really, in effect, we're still trading where we were trading back in September 2012. You can see we haven't done a huge lot. There is a slight uptrend there. I do admit there is a slight uptrend if you go back that far, a couple of years, but it's only very, very gradual. Range trading seems to be the longer term order of the day for WTI crude, I would suggest, looking at that chart. Okay. DAX. Right, another one that surprised me, I'll be honest. If you get my reports, and I did a video this morning, I day trade for myself. I don't work for a firm. I used to work on the live trading floor stock exchange floor from 1987. I witnessed that crash in 1987. Then I went to trade on life. I was backed by a professional. He poached, kind of headhunted me, if you like, and then asked me to go and work for him. So he financed me. He was quite wealthy, gave me quite a lot of money to trade. And then I traded for myself ever since. Okay, so DAX has surprised me again. Stock markets, I have to admit, they've caught me out. I thought all this activity in the last, month or so, 3 to 4 weeks, hovering below this trend line, I thought that we would eventually break below the 100-day moving average and head lower. Well, that isn't the case. Today, in fact, we've very, very clearly broken above this trend line. And that is a very positive move. We've got through all sorts of resistance. May highs, April highs. The April high was, 96.65. We're through that. So this is really positive for the DAX. We're pushing on to the March high, which is at 97.41. That looks like the next target. If we get through there, well, positive again, and we would be on to all-time highs, which were set back in January, which I think for the DAX future is 98.02. Correct me if I'm wrong. 98.02, yeah. So, yeah, 99.00, 98.02 would be the next target. I think. I can't really say anything other than that. I mean, we're going through there. If we happen to start closing back below this trend line, well, yes, that would be more negative. That would show failure, on a weekly basis, at least on a weekly closing basis, and we could be heading back to the 94.5 area. But at the moment, it's all looking pretty positive, and a test of the all-time highs now would not surprise me. ECB is about to do QE. Yeah, hello. Well, we'll have a look at the euro. I don't know how QE will affect directly, but I can tell you what levels we've got on the charts and everything else. IBEX. I'm going to leave IBEX until I can look up the code. I don't know what it is for on e-signal. WTI. Okay, so we've got euro and US dollar. Yeah, let's give those euro and cable. Right, euro's been really interesting. Well, it was fairly dull, to be fair, for a few weeks, and then, of course, Thursday we got the big move on the ECB conversation about QE and easing rates and blah blah blah. So we were looking for a test of. Well, I was actually looking for it to get as far as 140.10.15. We didn't quite get there. We got to 139.93. That to me was quite good resistance. It was a trend line going all the way back to February 2012. That was my target. Well, we missed it by maybe 20 pips, 15, 20 pips. Not a big amount on the grand scale of things. When you're looking at a weekly chart, I suppose. Would have been nice if we'd got as far as my selling opportunity, but we just missed it by a few pips. This weekly candle is particularly negative. We spiked to new all-time highs on the week and then closed lower, taking out 3 weeks worth of price action. So that is pretty negative. You can see which is approaching some trend line support. Let me see, that goes back to September. So what's that? Less than 9 months, 7, 8 months, whatever. Now, short term today, I was looking for some good support around 137.30, 40.35. If you get my reports, I was quite vocal about a good chance of a bounce from there. We haven't actually quite managed to touch that. I think we are going to get a short-term bounce. What I'm looking for, you see, we've got quite oversold here, and we are holding on to some good support. So I do think we can see a little correction Longer term, I am quite negative on this now, but so I do think any rally is a chance to get short, but I certainly think there is a chance we can get up to 137, sort of 95, 138.00 area. We're probably going to struggle there. If we manage to get as high as 138, 35, 40, I think that's probably a decent selling opportunity. Those are the two levels that I'd be looking for in any bounce. Trend line alone here, just at 137.95, 138.00 could well hold any little rally. We could even just go sideways while we unwind that short-term oversold situation and then be ready for the next leg down. Watch 137.40, 137.35 area. A break below there is going to keep the market under pressure. I do think eventually, I don't know the timing, I can't give you the day, but I think eventually in May we will break lower and head for 136, sort of 80.75 area. That's fib support. That's also the April low. That looks like the next target on the downside. So there's a good 60 pips or so in that trade on a break lower. But as I say, I'll probably be trying shorts around the 137.95, 80 area with a stop above 138.20. I think that was the suggested trade I put in my report this morning. Those are the short-term levels. We get through 138.20. Well, yeah, we could push on, as I say, to 138, 35.40, maybe even 138. What's this? 138.70. Yeah, 138.65.70, certainly possible. That would be the third resistance level I would look for if we get anywhere near there, which I doubt we will, but I think that would be a very nice selling opportunity as well. So when those are the levels I think to look for in the euro over the next couple of weeks. Cable. Oh, hang on. Just let me show you in euro. I'm sure you all spotted this engulfing or key reversal or whatever it's called, but that spike higher, taking out 1, 2, 3, 4, 5 days on a closing basis, at least 6 days, in fact, of gains in the euro. That was really negative, and it wasn't a huge surprise to see that big negative candle on the following day either. This really doesn't look very positive longer term, and having failed at a big psychological level, 140.00. It's not really a big... The only other resistance, as I said, I could find, which is a longer-term trend line. There's no sort of Fibonacci resistance or anything else, but it's good enough for me to think that the euro's reversed or at least topped out for the time being. Okay, enough on the euro. Cable. Okay, cable's been in a super uptrend. Very, very strong uptrend, in fact, since July 2013. Really had a good run. I really did think there was a good chance we'd stop here at 168, sort of 30, 40 area. We did for a while. I really thought we were going to see some decent profit taking from there, but we haven't. We've pushed on again up to that 170. Again, another big round number. And stopped. Not quite sure, apart from the fact that it is a big round number, why we've stopped there. I couldn't really see anything in particular to bring us to a halt. I thought we could get to 170, 30, 40. Anyway, that wasn't the case. We are getting a bit overbought in the weekly chart, but that's nothing. There's certainly no reason to sell it anyway. We need to look for other reasons. We have got some other reasons on the daily chart. Again, overbought in the daily chart, so we were always having our eye out for a reason to get short or at least get out of longs. There wasn't really much indication. We had Wednesday, Thursday, just a little pullback, but Friday was quite negative, and we broke below a short-term trend line. This trend line started on the 7th of April. It was a really nice trend line. It held quite a few times. So once we broke below that, the selling accelerated, and we headed for good fib support of 168.20. Didn't quite make that, did we? We got to 168. Hang on. We got to 168. No, we got to 168.28. Pretty damn close. I think that was where we were looking to get long on Friday. And if you managed to just jump the gun a little bit by a few pips, you did all right there. And we did see a decent recovery. Hang on, let me get my charts right. Yeah, short-term resistance. We've around 168.90. Not sure what I wrote in the report today, but 169.00, 168.90, 169.00 looked like a decent resistance anyway. we tried a little break above a short-term trend line. I've got this short-term trend line. Sorry, talking to myself a little bit while I try and figure out. I'm just looking at the hourly chart on another screen. It's 167.61. I had a short-term trend line somewhere. Where was it? That was it. Yeah, we've you can see we tried a little break above that very short-term trend line, and then we're now back below it. So yeah, anyway, the outlook for cable is quite negative, I think. Having broke below that trend line and held it today, 169.0510. The high is 169.03. So yeah, that's held that trend line going back to the 7th of April quite well. And it does look quite negative. Eventually, I think we will get to retest that 168.3020 area. That is good support. We're probably getting a little bit oversold short term. Yeah, we are. So we're just coming from that. By the time we get back down to 168.3020, we'll probably be looking oversold again. That is good support. That is really important for this week. That 168.3020 area. Break below there, and in particular, a close below there will add pressure. We'll head lower. Obvious targets would be these area around the 167.70, 167.65 area. And then we've got fib support around 167.30, 167 sort of 10, I guess, 167.30, 167.20. So those are the levels I think you've got to keep an eye on. Don't think cable looks too good. We'd have to at least be a close but above this trend line, above 169.20, before I could start feeling positive about this again. What could happen is that we hold 168.20 once we finally test it. Then we get a decent bounce back to the trend line, maybe even break through it and retest those highs, and then we dump. I don't think it's ready for an all-out sell-off just yet. I think we're going to have to, if it's going to go low, I think it's going to create some sort of topping pattern that's going to take days and weeks. I don't think it's just going to suddenly collapse like the euro has done. The euro I can see continuing lower, but I think cable will take some time to build a top. Let's go on to gold. Gold's been a real favourite. Been a bit dull. You can see the fib lines and the moving average lines just working really, really nicely here. Once we broke above that trend line, we managed to get, once we broke above the trend line going back to 17th of March, that downtrend line, you can see how we really struggled for 1, 2, 3, 4, 5 days. And on the 6th day, we finally broke through it. We hit the 200-day moving average. We struggled there. The next day, that 200-day moving average worked perfectly as support. And then we hit our target of 13, 15, 17, topped pretty much perfectly there. Sell-off did surprise me, I'll be honest. Didn't think we'd get quite back down to the 100-day moving average, but we did, and then held above that for 3 days. Okay, then this morning we broke lower, spiked down to this trend line. I'm on the 4-hour chart now. This is the same trend line. I'm going back to March 17th on a 4-hour chart, 16th actually. So you can see this morning how, if I open this up again, we really spiked lower. I'm not sure what caused that, but right on the open, we spiked lower to 1277, 1276, which I did have a support, and I can't really quite remember why, probably because of that trend line. Anyway, that was the exact low was on our support, which was nice. We've rocketed higher. It's getting volatile again. We're through 1298, which is now acting as support. And I think as long as we hold above that 200-day moving average and fib support at around 1298, it looks quite good for gold. I mean, I've been positive on gold for quite a long time, and I'm a bit frustrated that we haven't seen the move higher that I'd expected. I think gold is worth holding longer term now. If you need me to go over the reason why, if you've been following me for months, then you won't need me to tell you why. But if you need me to, just let me tell you. Then ask me, and I'll show you. But gold looks pretty good, and as long as we, as I say, as long as we can hold above 1300, 1298. Looks good. We should eventually get back up to 13, 15, 17. Through there, we've got late April, is that? Mid-April highs of 1330, 1331 would suggest we'll get up there. And then if we continue higher, we've got 1342, 1345 as the next target. But gold is really struggling to make those gains. However, I do remain positive. 1440, blimey. Okay, I'm afraid I don't look out that longer term, but could I see 1440? Yeah, I don't see any reason why we can't see 1440. It's so way off. That would basically be getting through last August's highs. We would mean getting through there 1433 to get onto 1440. But as I say, I'm bullish on gold. So yeah, we could see that sometime this year. I certainly wouldn't rule it out. Let me see. How do I draw my fibs? That would, I'm afraid, have to be about a 3 or 4 hour lesson on its own, how I draw my fibs. It took me years to figure out where to draw them. One thing I can tell you is I look at them on multiple time frames and see what lines up with what. It's not hard. Using fibs is very, very simple. There's no mystery to it. They do work. It's just a question of practice and figuring out how they work and on what time frames. But I'm afraid I just simply wouldn't have time to do that in 15 minutes now. Why do you think gold's a longer term hold? Okay, fair enough. Good question. That's let me go back to the weekly chart. Okay, in fact, let me get back to the monthly chart. Let me bring the monthly chart in. That's the only reason I can show you why. Right, gold. Monthly chart. This goes back to the beginning of the rally, which was around 1999. The low was, I think, 252. We rocketed all the way up. Okay, so the big sell-off in 2008, I've taken my fib from 700. That was when the rally started. We went up to 1920. Now you can see 61.8 is always a lovely fib support area and always worth trying a long or a short when we hit that level. 1166 was the exact support. We didn't quite get there, but we got pretty close. We got to 1180. When you're talking about such big moves, $14 is nothing. We managed to double bottom right on strong support. 1180 in, let me see, June of last year, 1182 in December of last year. Once we double bottomed there, that was, I think it was January the 3rd that I tweeted like crazy that gold had bottomed out. And I pretty much called that to the day. And that was the reason. It was a double bottom, bang on important support. I was looking for it anyway because we were so oversold. And so once I saw that, I decided that was going to be the low for gold. And if you follow me on Twitter, you can even look at my tweets back on January the 3rd if you want. Go back there. You'll see that I called a low for gold and also for the Aussie dollar on that day. To be fair, we haven't got the rally that I'd really expected. So that's a bit of a disappointment. But I'm still positive on it. I still think we will build on that double bottom. I still think we can go higher. But there's obviously quite a battle going on. And at the moment, for the last 4 weeks, it's been quite indecisive. But I still remain positive. I still think we can push on. Ichimoku. No, I haven't studied them, actually. That's the honest truth. I haven't studied them close enough. I do believe they work quite well, and it's something I should study. I like to keep things simple. I know what works, and I stick to what I do. I don't use many indicators. I don't use a lot. What I do is actually very, very simple. It's taken me many years to make it simple. Okay, so gold. That's probably enough. That's probably all I can say on gold. We really do need to hold above 1288 on a closing basis, though, and above 1300, as I say, is even more positive. We start closing below 1288, and obviously that was a risk this morning. I thought, wow, are we really going to break lower in gold after everything after me feeling so positive? I thought, wow, I'm going to be wrong here. But anyway, fortunately, we've managed to get back up through there. But if we close below 1288, I'm going to have to really seriously reconsider. Gold. Anyone care about the Aussie? I'll just quickly run through it. Actually, I won't run through it. It's not that exciting. If anyone wants me to run through the Aussie, then I will. Please ask me. Otherwise, I'm going to show you the yen, which looks quite positive to me. And I will show you why. Okay. Simple, really. It's been going sideways for so long. The yen has basically been pretty boring. This is a weekly chart. And on a weekly basis, we really haven't gone anywhere. You can see that for most of this year, certainly since Feb, it's just gone sideways. That's pretty clear. But we have, having said that, we have gone sideways, unwound any long-term overbought stochastic, and we're now holding this trend line which goes back to June 2013. So I think we're ready to take off. And I wrote this morning in my report that it looks pretty positive, and I did expect us to go up today. We were very oversold on the daily chart. We'd held support. We'd had some false breaks below 1, 2, 3, 4 days of false breaks below that trend line. And as you can see, we actually managed a close below it on one day, but having recovered quite quickly on Friday, I thought things looked positive and we should head higher today. Well, fortunately we have, and I think this is now the start of a half decent bull run. Excuse me. I'd like to see it through 102.20, 102.25. That would push us higher for, where am I now? Actually, we've gone pretty far. We've got through 102.00. That was a break above 102.0005 was my confirmation of a bullish move. We've done that now. That should now act as support, in fact, and we should push on, probably get up to 102.40, 102.35, 40, maybe even today, if not tomorrow. That's quite strong resistance in the very short term. So watch for us to top out maybe there around that 102.35, 40 area and ease back, perhaps retest 102.00. 101.95, and that's probably going to be a decent buying opportunity. I would imagine that would hold. If it doesn't, we risk a move back to 101.80, 101.75. But again, I'd be buying into dips on the dollar yen. I think we are ready for a more sustained move higher. It's about time. We've been going sideways for long enough. We'll look at the Aussie. You've asked for that, Chris. I think a combination of fundamental and technical trading is important. I think you've got to be aware of the fundamentals, obviously, but I think you have to be aware of technicals, and technicals are very good for timing. Fundamentals, I don't think, are very good for timing at all, but you combine the two, well, that works pretty well. Personally, I don't focus on fundamentals too much. I'm a technical analyst. That's what works. I think the price discounts what's the news that's already in the market anyway, and I find that technicals work well. They work better for timing. They work better for entry and exit points. Fundamentals are great, but they don't tell you what price to get in and what price to get out. And I think the most important thing about trading is getting in at the right level, getting out at the right level. But I wouldn't suggest, if the fundamentals and the technicals line up, well, of course, that's going to give you a lot more confidence in your trade, isn't it? If you're talking about higher interest rates in cable, you're probably not going to be wanting to sell aggressively into it, which is why I don't think we're going to get a massive dump in cable yet until I see a more of a topping pattern. Okay, Aussie pretty good. Starting to head higher. This is the weekly chart. FTSE, yeah, sure, mate, no problem. Right, you can see we've been building into a nice little uptrend basically all year in Aussie. We overstretched a little bit. I thought we'd probably halt around the 94. You see now, where was it? Yeah, 93, 95, 94, 00. I thought we'd halt and then correct. We actually overran a little bit just on this day here. That was the 10th of April. We overran a bit of a spike, a fool's spike higher, a bit of a bull trap. We quickly pulled back. Anyway, we did get the correction that we looked for. We came right back to this trend line. That worked perfectly. We've taken off again. So, yeah, things look good for the Aussie. We're holding the uptrend. We've unwound. That correction nicely unwound what was an overbought situation. So it's all worked pretty textbook. If we can get through 94.00 eventually, then we should push on for a retest of 94.60 above there, of course. It's going to be even more positive. What's it telling us on this short-term chart? No, not a great deal, really. We've got good support around 93.00, 92, 95. I don't even think we'll see that again. It just looks pretty positive, and I think we can just push higher on that. We're getting a bit overbought, so watch 94.60. Chance of a double top there, but stick with the bull trend at the moment. I can't really say any more than that. It's a decent 5-month bull trend, and I think that's what's important at the moment. I did think the Aussie had bottomed at 86.60. I'll show you quickly my reasoning. It's almost the same reasoning as gold. Again, as I said, on the 3rd of Jan, I called a low in the Aussie and gold. There was a simple reason for that. It hit very good longer-term support. 86.72 was the level. The low is actually 86.66, if I remember correctly, or 86.60 maybe. Yeah, bounced off there nicely. As soon as I saw that, I thought, that's it. We're really oversold. We got some divergence on the stochastics, and it was just even though we closed below that 100-week month moving average, it just looked like it was ready to bounce. Unfortunately, it did. I think that can continue higher. Okay, get rid of that monthly chart and look at the FTSE. How long we got? FTSE's actually look pretty positive. FTSE. Sunny, thanks for your message. Yeah, I'll reply to that just at the end. Actually, I'll reply to it in front of everyone. I've got a private message from Sunny who's asked me about my personal Twitter feed. I've got a live Twitter group, a live trading group, which I do through Twitter and private Twitter group. And they get all my reports and they get my calls and analysis, and we chat all day about markets and stuff, which it seems to work quite well. But I've closed it now for new members until July. I'm traveling a bit and don't have a lot of time for it, so I'm just sticking with the original group. But I'll open it up again in July for anyone who wants to join me again when I've stopped traveling. FTSE looks pretty good. This is the weekly chart. Trading nicely within a yep, Sunny, I'll make sure I've got your email, haven't I, Sunny? So I'll make sure I stay in touch with you and let you know. But thanks for subscribing to the reports. I saw that you were subscribed to a couple, and you can keep in touch with me on my normal Twitter feed that everyone's on, and I can answer questions if you need me at all, and I'm happy to be around. So do stay in touch with me on that. Right, okay. FTSE, it's been in a very clear channel, gently sloping up. It's worked really nicely. We bottomed quite a bit below this trend line, and we're now heading towards the upper end of the trend line. We'll probably keep going. It looks quite strong. In fact, it's looked the stronger of a few of the markets lately. 6,900 pretty much. 68.90, 6,900 would be the target for that if we can keep going. Let's have a look at the shorter term chart, see if that's something that we think we can do. Right. Getting overbought doesn't seem to matter. It's just edging higher. Don't fight the trend. Since the middle of April, we've just been pushing higher, so we're getting on for a month's rally. Just be aware that we're hitting Jan highs, 68.14. No, we're through that now, so that doesn't matter. So the next target would be 68.58. That's Feb highs. And then, as I say, if we can get through Feb highs, we'll be onto that trend line up at around the 68.90, 6900 area. Yeah, we probably will struggle there. That is a good solid trend line going back quite a long time, 9 months or so. So that definitely would be the area to be careful of. We're going to be very overbought there. And the risk of profit taking, I would have thought as well, unless S&P happens to have broken higher and rocketed. The S&P's actually retested all-time highs again today. That's quite well, obviously crucial. A retest of all-time highs is a very significant event for any market. That's the yen. That's the FTSE. We've done the S&P. We've done oil. Pleasure, mate. Anyone else want anything before? I think we've got another 4 minutes. Otherwise, we think if there's anything that was worth showing you here. Oh yeah, dollar index. I'm keeping an eye on the dollar index because I did think stock markets, as I say, were going to collapse, and they haven't. But dollar index is worth a look. There you go. That's what I think is important for the dollar index. This trend line goes back to 27th of, the last week of February in 2012. So you can see we've held that on several occasions. Now, last week we spiked through it, but we recovered very quickly. So that was a nice little false break, probably getting rid of an awful lot of shorts, and that could set us up for a squeeze higher now. We're back above the 100-week moving average, which is at 79, sort of 75 area. That's quite positive for this week. Daily chart. I haven't had a look at this for quite a while. You can see. Just stick some fibs on, short-term fibs. There we go. That'll do. Okay, yeah. So yeah, above 79.50 looks good. We're now sitting above 79.88, which looks good. We could be pushing on to 80.15, 80.20. This looks all right, I think, for dollar index. I actually thought the dollar would have pushed higher on a fundamental basis because I thought stocks would collapse and there'd be a flight to the dollar on a safety but safe haven type trade, but it's gone up anyway, despite the fact the stock markets are higher, which I really don't understand. Especially with gold strong and bond market strong. Anyway, sometimes these markets make no sense. Okay, so short-term levels for dollar indexes, 79, 88, 85. Then we've got to get through 80.06. We're going to have to get through there if we're going to continue any further gains. Getting a little bit overbought short-term, so just watch for some profit taking on that. But as I say, daily chart looks okay, and certainly the weekly chart looks okay. So perhaps buying into dips of the dollar index may be wise. Who knows? Maybe eventually we will get that sell-off in the stock market, and that will propel the dollar even higher. Of course, the close below. We'll need a weekly close below 79, sort of 35. Well, actually, I'd have a stop below 79.25 on a closing basis if you're looking for a longer-term trade. Chris, you seem to like longer-term trades. Maybe that one would be something that you could look at. Let me just go back and put some fibs on here, actually. Oh, look at that. Perfect. Okay, that's worked really nicely as well. So this backs up my theory. Didn't expect that. 50% fib, 78.91. Last week's low, 78.93. In fact, last week's low was, 78.93. So that just worked perfectly. We spiked lower, spiked below the trend line, hit the fib support and rocketed. So that weekly candle is very bullish. That spiked lower through many, many lows, even through October lows, and then the close above last week's open, almost reaching last week's high, in fact. So that's a pretty good one for dollar index. That's the dollar index we're looking at the moment. Hold on 1 second, if you could, please. I've just got someone asking me something. Sorry about that. The long-term trade was buying the dollar index after last week's very positive candle, which you see here right at the end. Spike lower, higher close above the 100-week moving average, which is now at 79.77. I think the dollar index looks quite positive. We've held fib support. We've seen a false break of long-term trend line support. It looks pretty good. It looks pretty good to me. Yeah. I think we can start to stage a recovery. And if you really want some long-term fib levels, well, they're obvious. That would be... Okay, so if we can get through 880, the 80.00, 80.05 area, we'll push on to 80.35. Then we've got to get through 80.77, and we can get up to like 81.15, 81.25. Can we have a pullback? Yeah, I wouldn't rule it out. In the very, very short term, we could have a pullback. 4-hour chart looks quite overbought. We're getting very close to short-term fib resistance around the 80.00, 80.05 area. We could fail there and pull back. Yeah, where to, I don't know. 79, 60, 65 looks like decent support, and below there, 79 sort of 30s looks decent support. Or could it go down if dollar index goes up? Who knows, perhaps. Do they correlate that much these days? I don't think they really do. Maybe I'm wrong. Let's have a look. Longer term dollar index. And the dollar's been heading lower. Oil's been heading higher, I suppose. Let's have a look. Kind of. I don't see much inverse correlation or anything there. Maybe you do. I'll leave that up to you to decide. Oil could go down if dollar index goes up. Yeah, well, there is that theory, isn't there? Strong dollar means gold and oil are more expensive and they go down. I don't know if that's really relevant these days. I don't know if that's the base for trading in anything, but I'll let you make your own mind up. It could well be the case. I stick to my technicals, so I'll leave you to decide on the fundamentals. And maybe my technicals will help you with that. Okay, I think we're going to be done now, 10:45, so I think that's pretty much it. I think we're going to get called to end any minute now, and if there is anything else you want me to have a look at, then I'll be more than happy. Otherwise, my website is daytradeideas.co.uk. Please have a look. You can get daily reports on 25 different markets. You get a report every morning before 6 a.m. GMT. They're often delivered at 4 or 5 in the morning. So you're all ready with a trading plan for the day. We've got lots and lots of subscribers. I'm going to give you my Twitter just in case you haven't seen it. You can follow me on there. I give loads of reports for free and loads of stuff on Twitter, and you can chat to me on there as well. I can't invite anyone into my live trading group. I'm afraid I have closed out to new members for a couple of months, but basically what I give in the live trading group is all in my daily reports anyway. So to be quite honest with you, you could quite happily just have a look at the reports every morning. They give very, very clear trade entry and exits and stop levels and everything else, which you've probably seen on my blog. And I'll show you that now. There's loads of examples of the reports on there. Thanks very much to everyone. Please do contact me if you need me on my email.